Good evening and welcome back to the latest edition of the InvestTalk market analysis for the week ending September 26th, 2025. And this week I am titling the video Gold Outperforming Equities. What is that telling us? Interesting topic to explore, but we're first going to look at the market as a whole, and then the economic numbers as usual. And I always like to start off with this heat map. It kind of gives you a good sense of what sectors are performing, what companies are performing, especially the bigger names because those are easier to see. And this is a weekly view. So what happened in the prior week? Well, you saw Nvidia, Apple, definitely strong performers, Tesla, but Apple of the Mag 7 were the strongest. But then you look at some of the names that are spending a lot of money on AI: Google, Amazon, Meta. They didn't do so well. Microsoft flat, another one spending a lot of money on AI. And then you look at some of the other names within the space. Broadcom down 3%. And Nvidia positive for the week, but not a gangbuster week at all. So I thought that was noteworthy. And then you look at other pockets of really weakness. Healthcare continues to be relatively weak. Names like Thermo Fisher Scientific, Eli Lilly, Danaher, Amgen. These are all names that just have been in longer term downtrends and just continue to struggle. Merck is another one. Okay. But finance space, the big banks are doing okay. You did see the private equity names starting to suffer for the week as well. Blackstone down 7%, KKR down 11%. What's the other one? There's another one. I'll have to go look at the chart, but there you go. Apollo down 5% on the week. You had some strength out of energy. That was definitely green. Exxon up over 2%. A lot of the utility names like Nextera, yeah, Energy, and just some pockets of strength, but also lots of pockets of weakness as well. So, the bigger picture is it was a mixed week. Mixed week. Now, let's look at the economic data. Richmond Fed manufacturing, not so hot, remains in negative territory. We went there in March and we have not gotten up off the mat. You had one little tick up here and then down, one tick up here and then down. So you aren't getting really much of anything. It's just a continued downtrend, at least in the Richmond region of the country. Okay, that's Richmond, Virginia. Then you have new single family homes sold. This is the biggest positive here. Went up to 800,000. That's the highest level. Nearly over 3 years. Okay. And then you have existing home sales that didn't have quite the strength, but certainly hung in there. You are seeing mortgage rates come down a little bit, and clearly the home builders are using that opportunity to move inventory, and they did so in a pretty decent way. Now, on the jobs front, you did have the initial jobless claims, claims of unemployment, tick down dramatically, but what you can see here is it ticked up, now it ticked down. There was some fraud here. This is kind of a noisy, and historically it's pretty noisy, right? So I always say I don't love uh, that series, although a lot of companies, not companies, media outlets talk about that. Okay. So I like to focus on continuing claims as usual. And what you can see is still has some volatility here, but less noisy. And it's been hanging around that 1.92 level, and that 1.9 to 1.95 level. Not breaking out to the 2 million mark or anything like that, but still showing you that the overall labor market is modestly weak. Let's just say that. Then on the inflation front, you had the core and regular PCE index come out on Friday, and that on the traditional non-core, they tick up to 2.74. That's the highest level in over a year. Let's see, go back 3 years. Yeah, it's the highest level. 2.1. Last time we saw it, there we go. It's April of last year. So about a year and a half, highest level in a year and a half. Core PCE that did tick up as well to 2.91. What you can see is inflation is accelerating as I've been expecting in the back half of this year, closer to that 3% level. Right, earlier in the year we were pushing about 2.5. in that range for most of these figures. Okay. But now we're pushing back up towards 3, which is not a shock, especially with a weaker dollar and an economy that's somewhat hanging in there. The Fed expected to cut rates once again in October, a little over a month from now. And that's pretty much locked in here. And December, once again, there is a pretty decent chance, 87% chance, there will be 2 rate cuts between now and the end of the year. Okay. 87% chance there. Actually, sorry, let me refresh that. Yeah, 87% chance of 1 rate cut in October, and then 65% chance there'll be 2 rate cuts between now and the end of the year. But as usual, I don't think that is, I think is overblown, that this is going to have a giant factor on broader liquidity. I always focus more on this, which is bank lending. Interesting here, it did tick up to over 5% year-over-year growth back in late August, and now it's kind of tempered back down into the 4.8. Still solid, still an uptrend, but still, I would say, kind of in this consolidation period between 4.5% and 5% year-over-year growth in bank lending. I always look at Bitcoin as well. It's kind of a proxy for liquidity. And what's interesting here, let's go to a monthly chart. This is pretty weak. And look at this kind of sideways consolidation, bearish consolidation around this 109 level. This looks like it wants to head lower, probably down to the 107. If it breaks 107, you certainly are now in a downtrend, right? You would now have a lower low and a lower high. That would be a downtrend. Okay. Right now we have one lower low. Okay. Sorry, one lower high, but not that lower low quite yet, right? Because we had that new high here back in August around 123 that failed to break out. We pulled back to about the 107 level. We rallied back to 116. And once again, we're at 109. So it'll be very interesting to see if we get a lower low in Bitcoin, and that would solidify the downtrend that we've really been in since that failed breakout in mid-August. And it would also give you a sense of, hey, this is a market or a liquidity dynamic that is looking more bearish. Let's just say that. Now let's dig into the broader markets, and I'll start off with this chart because it's kind of the title of this video. Gold continues to outperform equities, and that has been since the beginning of the year. You just continue to see gold outperform equities. Obviously, going into Liberation Day, that was really when this really took off in a big way, and gold just a flight to safety. Now that's pulled back some, right, as equities have rallied. But what you're seeing now is equities are not stopping their rally. We're still in an uptrend, but gold is certainly breaking out, right? So we can take a look here. Gold taking that another step higher, whereas what's happened with equities, it's still gone up, but not to the same degree. So this is telling me that the geopolitical tensions continue to rise globally, and money is flowing into the safe haven that is gold. And I don't think that is going to change. So certainly something to continue to watch and follow. And the markets oftentimes they tell you things. They tell you things before they actually happen. And I think what it's saying is that geopolitical issues are bubbling up. And I would say even domestic issues are bubbling up. And when there are growing tensions like that, money tends to flow into safer, harder assets, and gold is one of them. And what you're seeing here is silver started to outperform gold as well. So this is silver to gold ratio. It had been in a long downtrend. So silver is shining, shall we say? So that's very interesting and something I continue to watch. Now, what else? Sorry, it's a late night here. We were at a long skimboarding meet, so it's been a long day. Let's go with the Nasdaq. Nasdaq was very strong, continues to be very strong. You are seeing a bit of waning momentum. But overall, I don't see this as a major warning sign for equity markets. We are heading into the fourth quarter, which tends to be more bullish. Everyone was expecting the market, including myself, to pull back to some degree in August, September, and we didn't really get that, right? We had that little blip here at the end of July and a choppy period for most of August, and then September has been strong, and there's no really other way to explain it. On the foreign equities front, this is looking kind of like that gold to silver ratio, or sorry, gold to equities ratio. So I am expecting the foreign markets to start to outperform once again, but you are going to need to see the dollar weaken. And so far, you've seen the dollar strengthen off of the first rate cut. I've talked before, it's a bit counterintuitive because I think a Fed rate cut will actually be deflationary and less stimulative to the economy. So something of note there. And so I do expect the dollar to get a bit stronger near term, even if we're in a longer term downtrend in the dollar. So it'll be interesting to see when the bounce in the dollar rolls over. Now let's take a look at things like the private equity space. This was of note to me. Okay. So you're getting weakness in Bitcoin. You're getting now weakness in the private equity names. And now you don't have one sign of liquidity starting to ebb, but now you have, in my mind, two. Okay, here's Apollo that also kind of rolled over and never even got the strength that the KKR had. What else? Blackstone would be another. Okay, here's Blackstone, certainly stronger, but also rolling over. So those are kind of the main names that I follow to see where private equity is going. And the fact that that's starting to roll over, even though you're getting rate cuts from the Fed, is noteworthy. Okay, so something I'll be watching. You see this. This is BKLN. This is the bank loans as well. That's not really getting much traction since it went ex-dividend here on the 22nd. And also another area that I'll be watching. Here is a short-term junk to short-term treasuries. That hasn't seen much of a sell-off, so that's not really giving me any warning signs on the credit front. But once again, I'm seeing now two, it's not enough, but two signs that the liquidity dynamics are looking a bit toppy. And then if you go into some of the subsectors, you have semiconductors doing fine. Let's take a look at things like the cloud. Cloud, this is not getting as much of strength as some of the other tech leaders. So that's something that's noteworthy to me. You aren't seeing broad-based advance in the tech space. II, this is the broker dealers. This is another subsector, kind of similar to private equity that I like to follow to see, are you getting uh, the risk on move? And broker dealers, because remember, what do broker dealers do? These are the Goldman Sachs, the Morgan Stanleys of the world. These are the names that are helping companies IPO, companies raise capital for uh, debt offerings. They are helping with M&A activity, things like that. And if the broker dealers are looking weaker and looking toppy, that is another sign of potential weakness ahead. Now, once again, this is just slowing. It could be a consolidation period, absolutely. So you don't want to get too ahead of it. But if say this breaks below this green line, which is the 100-day moving average, then you could start to say, okay, that's another sign on top of private equity, on top of Bitcoin being weak, that's telling you liquidity might dry up. Okay, so I'll be watching that. You're getting a few more signs, but not enough to say, okay, this is the end of this bull run, because I don't think it is quite yet. This is a note as well. Global natural resources, that continues to be strong. We talked about Oil doing well this week. You saw oil prices. Here's the USO, strong on the week. The XLE really breaking out, pretty decent uptrend that you're seeing here. Still in a broader choppy pattern. I would say on a weekly chart, if you zoom out, it's probably more neutral than anything, right? Just kind of choppy here, not bullish, not bearish. Financials on the weekly. Let's go to it back to a daily. See if this is any sign that momentum is waning. Yeah, you're getting some MACD divergence here, but nothing too crazy on that front, if we're being honest. The industrial space, kind of same thing. You can see this. You're getting a similar pattern where you've had this rally and you're not really making new highs here. Now, once again, it can be consolidation for another breakout. That's absolutely true. But, you know, at this point, short term, it's at least neutral. Okay. I'll be watching too utilities that got a bid here. This typically is a flight to safety, so I'll be watching that. The consumer discretionary, that looks fine. I see no issue there. To me, it's more around private equity, private debt. Consumer is relatively strong. Unemployment, while the labor market is weakening, unemployment rate is still relatively low. There's not a lot of layoffs, even though there's not a lot of hiring, and so you continue to see. Um, I think the consumer discretionary side remain robust. The metals and mining, look at this. I mean, this is kind of like GDX. GDX. This is just super powerful. Okay. And I don't see any change anytime soon. Money is flowing to harder assets. And the faster you can get harder assets, I think the better off you are. Um, it's interesting too. TLT, you had that rally but it still remains in this downtrend. Okay. So if you zoom out to, say, a weekly chart, you had that big sell off. This is 2020, 2020. You really had it here, 2020, right? But really, it took the major leg to the downside in 2022, and it's just been in a downtrend ever since. It's been bleeding month after month, week after week, and you're not getting a change in trend in my mind. And ultimately, if this breaks down below the 2023 lows, that would be a big sign of money just flowing out of the US and problems in the treasury market. Now, if we look at the move index, here's the daily chart. There's no issue right now. There's no issue right now. So the fact that this remains well below 100 tells me there are no issues right now. They're issuing on the short end. And they're keeping any problems within the treasury market at bay. And as long as that's the case, you can't get too bearish on the market. Any pullback remains a pullback amongst an uptrend that we've been in really since the April lows. So while there are some signs of some liquidity dynamics ebbing, you still have to see it for what it is. We're in an uptrend. You can't get too bearish. You have to stay long this market. But you also have to listen to the message that I said at the top of the show, which is, what is gold telling you? Gold is telling you that geopolitical and economic concerns continue to slowly rise. And when that happens, there will be an event that likely creates a risk off environment. Does that happen sometime in the fourth quarter? Does it happen sometime in 2026? I don't have a crystal ball. I just know that the gold market, the precious metal market, is telling us a story. And you have to listen to that. You don't have to do anything today or maybe next week, but it is a message that needs to be internalized and understood, and you have to adjust your portfolios accordingly. Well, I appreciate you all tuning in, liking and subscribing to this video and our channel. And reminder, the contents of this video are for educational purposes only and should not be construed as a recommendation to buy or sell security or to participate in investment strategy. The views are my own and do not represent those of KP Financial or those associated. Have a wonderful weekend.